Hey guys, RR Expert here. Tried to record my voice, but my mic didn't work. What I did, I entered here. Like I'm saying, like always around the close or open of the 4 hour. It doesn't matter what asset it is. It works on every asset class. I'm just following the open and close of the NQ. You can see here 10 minutes. And I'm not expecting the price to come down. I'm also looking at the higher time frames here. For example, I'm seeing this up move here. Again, not looking at the gaps. So there's a strong indication that the price wants to go up. That's why I enter, I go long. I can move my stop loss, but it's not necessary to hit the target. And as you can see, this is not the 10 a.m. Let me go here. See, this is the, I'm anticipating now the 6 a.m. opening candle. So normally I did them at 10 o'clock, but I'm showing you here, same concept, trying to look for a setup around the 4 hour opening close. And as you can see down here, it's almost 6 a.m. New York time. But let's wait and let's see if we can see a trade for when the candle opens. So the 6 a.m. candle. That's going to be in 9 minutes. So just to show you some proof, when I talk to a lot of ICT students, they would then argue because of this gap is going to come in this gap, for some reason. But as you just witnessed, we did not wait for the price to come here. We're seeing something, we're applying our model, looking at the 4 hour open and close. Again, on Bitcoin, it's still 1 hour. But on NQ, it's almost closing. So I'm looking at the NQ and then just try to look for setups. And you see, you can argue, yeah, but it hit this gap, but that's the shady thing of this fair value gap thing, because, am I going to wait for this gap here, or this gap here on this time frame? And this is where a lot of people make mistakes, because they say, no, I'm going to wait till it hits this, but you just saw that we did a trade and we did a small scalp. I'm not saying the price is going to come here or here. But again, I don't believe in this stuff. You guys can do whatever you want. Some of you are DMing me and you're swearing by it. But I mean, show me the proof, man. Show me the proof. You can see these candles, they're really ugly. Well, this is what happens when there is not enough volume, So it's really not advisable to trade this because you get really bad spread. So you might enter here where the price is now, but you might be filled here for a short. So be careful when you see these candles. Same for NASDAQ, but for the sake of the model, so in like 20 seconds, let's see what we can find on NQ. So we did a trade on Bitcoin, but let's do one on NASDAQ. Oh, wait a minute. Or maybe, what is the S&P? This is why I don't trade S&P. Look at this. Okay, so the candle opens, and then we're going to look, and price is going down immediately. Don't be fooled by these things when they happen immediately, you know. So let's just observe if the price is indeed going to go short. So when you're new to the model, you're not just going to enter here because I'm saying we're waiting for this this move. Yeah, observe this first and do this 1 week, 1 month, you know, and then try to do your entries. Especially if you already have a model. I'm not saying like let go of your model and then do something else. No, that's not what I'm saying. I'm just saying if you have time, observe these things, you know, 4-hour candle opens and wait for a move to the upside or downside. But when it does this immediately, I'm kind of hesitant to jump in now for a short, you know what? Let's just wait. Let's wait for what the price is going to do. Also because the price looks bullish, eh? You can see the price going up. So you want the move to take place in the direction that the price is going. So I'm going to go long here on gold. Same concept again. I'm just observing the price. And because it's before the opening, I'm not going to aim for these big moves. I'm just going to take this, man. I don't like it when it just barely taps into it and then goes down. But this is the downside of trading around these hours. So if you're trading around the 6 a.m. New York time candle, you can see the candles. They're like really weird, you know. And so there are two things you need to understand. The first thing is if you trade around 6 a.m., you're gonna have low volume, and that means bad spread. Yeah. So if you're doing one-on-one, be careful because you might lose a lot of money on spread. And I don't know, maybe you have commissions and other stuff as well. And then as you saw in this example, if you trade one-on-one, you might want to trade at least 1 to 2 risk to reward, you know. But you know, these are things to take in consideration. But I can understand that some of you cannot trade around 10 a.m. you know. So I'm just giving you options. And again, the price is going up, but I don't care. You know, I took the money. It's not. I'm not gonna cry about maybe $40 or $20, and then we go look for something else. So NQ had this move down, but you know, when this happens exactly at the opening of the candle, I'm kind of yeah, careful not to just enter, because sometimes it goes down and then up first. And another contradiction for me is if you look at the higher time frames, the trend is bullish. So when the trend is bullish, I want to look for a impulse to the upside instead of the downside. So these are things that you need to take in considerations, yeah. But let's see if we can do a trade here again. Not gonna aim for a lot, maybe here, and then put my stop loss here. So I'm not waiting for gaps or anything to fill. I'm seeing this up move in a bullish trend, and I want to participate in that. Let me see, gold. Now, and again, let me copy this as well, and also put that here. Yeah, so keep this in mind, guys. And again, 10 a.m. is the best, and even 2 p.m. is the best. Just take it, you know. So when you see you see what I'm doing. I'm just taking the money. I don't care for the 20 or 30. You know, you just scalp, and you do this when you get better and better. You know, 2 times a day, 3 times a day, and this is all happening on the 15-second charts. Okay, okay. Let's wait and see if we can go, let's see if we can do another trade. Just going back to gold again. So if now gold, so what I'm observing here is if this is going, if the price is going to attack this, then I'm going to assume that we're just gonna go short, and so then I'm gonna look for the short. But again, the overall trend looks bullish. Let me see NQ again. And it's always good to journal. I made a video about this, why it's important to journal. It's always good to journal. When you did your trade, you're just gonna write down. You know, it's really easy. Just open a WordPad, and for example, you write down, you know, entered, and what was the target? Well, you set 1-on-1. And then you have like a column in Excel. So I do this in Excel. Where did the price go? Yeah. And then you can say, so let's say the price is going to go down now, but you can write down 2.63. So that's what you're going to do. And then when you do this for a week and a month, and because nobody's doing this, and I also get sometimes in heated discussions with my students, these things also happen, you know, so it's not only teaching, but sometimes I gotta be strict, you know. But if you do this for a week, then you can come to conclusions, you know. So one of the conclusions can be that I'm doing entries that have a high probability of going to at least 2.5, for example. Yeah. So if these trades that you did here had the price that went 1-to-1, so you took profit at 1-on-1, but you're seeing it went to at least 2.5. Then in the next month you can aim for 2.5 because you know that your trades will at least go around these risk to rewards. Now, if you are thinking about or thinking in terms of money, so normally let's say 1-on-1 is $50. I don't know. Yeah, so this is something that you have to decide for yourself. But now you have, let me see this. What I mean here is 2.5. This is what I mean. Yeah. But now you have 2.5. It's not going to be 50. It's going to be something like 125, right? And this is how you perfect your model. You're not perfecting your model by watching my video and saying, "Oh, he's doing the opening candle." You have to write down and journal your trading journey, because every person is different. For example, I'm saying I'm just going to take this money. You might say, "No, I'm going to let it run." This is all personal, guys. I've never met a one-on-one trader, and when I say one-on-one, I'm talking about the behavior of a person. So you have to take this in consideration, okay, guys? If you have questions about these things, you know, just DM me on Discord. Yeah. Okay. Yeah, this is why we get out, you know. This is the model is because it's so high probability every time we are doing this. Every day I'm showing you this. Okay. So I said when it attacks this, let's look for a short. So that's what we're going to do now. Let me see if that's a good idea. So I'm looking at the higher time frames. Okay. So what I said in previous videos, when I see this, I'm not interested in this, man. This is too difficult to trade in. But NQ seems to just be going down, you know. And now entering here for a short is just gonna be FOMO, you know. But it's very tempting to do this, but don't do it. And so every time it makes an impulsive move, so you can go in here. It's too late now, but maybe if the price was here, if the price would have been here. So now you can re-enter because the price does come here. And you put your stop loss here, you know. And you scalp 1-on-1 every time, because you're seeing it. It's happening here. Boom. You might take a loss here. That's possible because this moved. But this move definitely 1-on-1. Let's see what this is going to do. This up move. And sometimes you lose. And this is why you have to do it in paper trading. Get familiar with this. Don't just go watch videos and say, hey, I want to be funded and I'm going to apply this model on a funded account. Don't do this, guys. See, you would have got a 1-on-1 here as well. Okay, not yet. But maybe it's going to go to 1-on-1. But that's the thing, you know, when you wait for these gaps and you're going to enter from the gap, so here, you know, the risk to reward is going to be, there's going to be a big difference. I've made many videos about this. That's why you enter, you know, you just enter when you see this up move. Then you have a tighter stop loss. Let me see, what did we enter? I think we entered around here somewhere. Yeah. So, like I said, this is bad, you know, you want to be in the trade faster. And some of you guys, you DM me and you say, hey, how does it work? And then I keep telling you, you have to get familiar with this. And you guys are not doing this. Also, when I'm saying you to, hey, journal what you're doing, show me a screenshot, and you're not following the instructions. I'm not saying by doing this you're now going to get funded or anything. I'm never making these claims. I also never made the claim that I'm rich or any of these stuff. I'm just sharing with you what I'm saying. Yeah. And you see, the price doesn't have to come here. You just scalp every time you just do a 1-on-1. So I'm expecting the price to come down more, but it's, if you enter here for a short, it's going to be FOMO, because you want to be, for example, in this move here when this happens. This is going to be yeah, not a good one. This because look how big the stop loss is going to be, and this is the 15-second chart. This black candle probably went within one move, so you want to stay out of these ones. You see, and this, guys, this is what I'm doing. I'm just looking. I'm going from here to here, you know, saying, hey, what is gold doing? Am I seeing an impulsive move? So again, you want to stay out of this, because you can see a strong move down, but it went up again, and then down again, then up again. So ignore these ones, but then go to another asset. Here, this is another perfect example when you want to trade gaps, right? So we had this gap here, went through it. We had this gap here as well. So you have this gap and this gap. It just goes through it, and then it goes in this gap. And then in hindsight, you can say, you see, it comes into a gap. And, again, guys, you should believe what you think is right, but I don't believe in that stuff. And if the price here goes up now, that sometimes happens, you know. Sometimes you have a run. You can also let it run, but then you have to take a loss here and here. And then maybe you have a runner here. Yeah, so that's up to you guys. Yeah, because also with this, what I'm explaining here, a lot of you guys are asking me, when should I let it run? When should I not let it run? Well, this is up to you. It depends on your strategy. And you can use all these these kinds of, you can combine this with all your other models. For example, if you're saying this is resistance here because of this, you just apply the model. I'm not saying you cannot combine this with other stuff. Some of you come to me, you say, I'm trading support and resistance. I say, fine, you don't have to let go of that. But maybe my model can be an addition to your model. So let's see. So for example, you see on S&P price makes an up move, you know, but I don't like the price on S&P. Like I said, Bitcoin is going to go down more, but again, we're not going to FOMO. Not going to FOMO. Don't do that. It's not part of the model, but it is a good way of training yourself, you know, because you're saying, I think the price is going to go down, but we did not participate in the move, and I would not enter anywhere here, because here you would have a big stop loss. Yeah, this move is too big. Also, they did not come and retrace into it, you know. Let me see what Bitcoin is doing now. Does it want to go up here? Let me see. It's very tempting to go long here, but I don't know. Yeah, maybe. I don't know. Let's go to NQ again. I'm gonna delete this, guys, because it's annoying. So again, these are all downsides of trading around this hour, but you can see moves do happen here, you know, moves do happen. It's the same concept, but you just, I mean, if you're going to trade these candles, the only downside that you have to take in consideration is the spread. You're going to have a bad entry, you know, for this model. So if you want to have better spread, trade after 9:30, so around 10 a.m. or 2 p.m. or what was the other one again? I keep forgetting. Yeah, like 6 p.m. Yeah. Let's try to do one more trade. Let's see if NQ is gonna make a retracement a bit more, and then if it goes up, we're gonna go long. Yeah, so let's wait if it comes more around these areas and then go up. And what's the logic? Just because we're seeing this this kind of structure, you know, making highs, low, higher high, higher high. That's the only reason. So let's see if we see a move to the upside to do one more trade. So the thing to keep in mind, so the time is progressing and we're moving away from the open. Yeah? Yeah, so we're moving away from the open, and then everything I'm doing now is going to be lower and lower and lower probability. Yeah, so you want to be in these kinds of moves and then do a scalp, and don't worry about you not getting 1 on 5 or 1 on 6. Just do 1 on 1 first. So I'm going to wait. But just for an example, yeah, let's just enter here. You see how bad the spread is? So normally on NQ it's almost near to perfection. But if we do this now here, 45, and then aim for 45, when we talk about structure, when there is low volume, you have to make bigger moves to make more money. Yeah. When there is more volume and you look at structure, then this move to here can already be 200 or 300. Yeah, so keep that in mind. Okay, so a loss, no problem. Was only 45. Maybe the price does want to go down. But it, you know, again, like I'm saying, try to look for a trade around the opening. That's the best. The more time progresses in the candle, it's just not going to do this model, you know. I'm gonna re-enter. I'm gonna do a revenge trade here. Yeah, I'm gonna do a revenge trade because the price stopped me out, and I'm now doing an emotional trade. I didn't like this. If I get stopped out like this, I sometimes get yeah, very angry. But that's not good, guys. But I'm gonna do a revenge trade because I was confident the price is gonna go up here. I'm gonna get my $45 dollars back, hopefully. And you see, yeah, when it goes through it, because of the spread, it's not going to fill immediately. So it has to do one up move. But anyway, guys, I'm going to go eat, and I'm going to try to do another example for you at the 10 a.m. So maybe I'm going to upload another video. And before I go, just as an example, you see this? Sometimes this happens, you know, you get stopped out just like this. But don't do what I did by revenge trading. But if you're confident the price is going to go up here, just enter again, but put your stop loss here. And if you lose again, then stop. Yeah. But sometimes you're right, but you're just barely getting stopped out. But anyway, guys, hopefully to see you soon, or otherwise tomorrow, man. Goodbye. Bye-bye.